What we see here is a chart that shows the revenue of Apple, both historical and projected, and that's the white lines. And what we see is a company that's dramatically growing its revenue. How? By getting into new markets. The market for the Mac is flat. I'm sorry, yes, the market for the Mac is pretty flat. So they have to get into these new markets, right? And as they get into new markets, they're generating new revenues. But look at Microsoft. Look at their revenue line. If you've been a stockholder in Microsoft since the year 2000, what's been your rate of return? Yeah, other than that one big dividend they paid, it's really been nothing. You've gotten nothing out of being a shareholder in one of the world's few remaining monopolies, right? And they remind us all the time, it's a monopoly. Every time you boot up the PC, you're reminded that it's a monopoly. Yet somehow they're not able to grow, right? They're stuck. They're stuck defending the PC, trying to defend the business that they've always been in. In 2007, Microsoft had 45% of the smartphone market. 45%. But what happened was as they went from 2007 forward, they felt compelled to do what? To defend the operating system and the applications base. So what we see them doing is investing in Vista, and we see them investing in Windows 7, right? And Office 2010. How many of you went out and bought all new machines because of those great, phenomenal steps forward, right? But how many of you are thinking about buying a tablet or an iPhone or maybe even a Mac, right? See the difference there? One company is busy trying to defend its base, protect the mothership, take care of that legacy and that history. The other one is saying, I'm going to go generate new markets with growth. And then what we start looking at is, in fact, why this is so profitable. What you probably forgot is something that you might have heard about in an economics class long, long ago called declining marginal returns. It's a pretty simple concept. It says that whenever you go off and you do something, you spend $1 to go get a job done, you get it and you're very happy. But then the second time you want the job done better. You don't get it for $1, you have to pay $2. And every time you try to get the job done a little bit better, the price keeps going up, 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 and up. It goes up geometrically. And that's what we see happening at Microsoft. The cost to keep producing more operating systems, to give you new widgets in Office 2010, keeps going up. So that by the year 2009, we see 14.6% of revenue spent on R&D at Microsoft. Something that's close to, 14.6% of revenue, almost $9 billion is spent, right, on R&D. To give us what? What did you get out of that that really excited you? On the other hand, look at how much was spent at Apple. We see only $1 billion and only 2% of revenue. So the company here that's most innovative in the marketplace, well, there might be, maybe Google's in there with them, okay? But we can look at the numbers that are spent on R&D, product development, product launch, and what we see is it's dramatically cheaper to be an Apple than it is to be a Microsoft. And that sort of violates everything we think about in business, right? What we like to think about in business is, well, you should always invest in what you know. You should always develop your core. You should always be a little bit better. You don't want to let the competition catch you. So you keep putting more and more money. That's the safe thing to do, right? We have to protect our customers. We have to protect our core competency. So we keep pouring money into protecting the thing we know. And we kind of forget how profitable or not profitable that may be. At what point do you finally say putting more money into a market that's going nowhere isn't worth it and I stop? Unfortunately, most of us don't stop pouring money into that until it's way too late. We tend to go on and on and on down that road like Sun Microsystems. Does anybody remember in that same year, 2001, where Sun was? They were worth $205 billion. They were considered the company that had created the infrastructure of the internet. All these Sun servers were out there at all these telecom companies. Corporations were getting rid of computers to replace them with these Sun servers. They were the backbone of the future. Remember all that sort of talk? They were acquired in 2010 by Oracle for $5 billion. $200 billion of lost market cap across a decade. Sun doesn't even exist as a company now. It's just a small division inside of Oracle. Or how about Silicon Graphics? There was a time when if you wanted to get an animated movie, you had a guy at Disney who painted cells. Remember that? And what changed all that was a company called Pixar. right? And Pixar created software that allowed you to do all this animation on a computer. And the computer that they used was an SGI box. Silicon Graphics made these small computers the size of a PC that were like a supercomputer. And they said, wow, with all of the needs of what people want to do in the future, this demand for a supercomputer in a small box is going to be great. So that's where they stuck their head. And they kept trying to make faster and faster and faster machines for the graphics market. But what happened? Over time, the PCs caught up, and we said, hey, high school kids can do what I need to do for graphics on this $1,500 machine. I don't need a $25,000 machine, and SGI went bust. And in 2010, they disappeared from the market entirely as well. Two companies that truly knew their core. Sun Microsystems was so dedicated to its core that it invented a little product called Java that was dramatically helpful for anybody on the web. And they brought all the executives together and said, we've got this great new product, it's called Java. And they showed them, the executives, the product. They said, what are we going to do with this? And they all said, I don't know, we're a hardware company. And the group met for 2 days, and their final conclusion was to give the product away because they simply didn't know how to sell it because Sun was a hardware company. And as a hardware company, they didn't know how to sell software. All of you are using Java every day of your life, while the Sun boxes are finding their way into the dustbins. So knowing your core gets you locked in. When you get locked in, you can get into a lot of trouble, not because you're a bad manager. And that's the one thing I want you to understand. Very rarely do businesses get in trouble because people like yourselves are sitting in a room and they're stupid. They're not stupid. And it's fun for the press to beat up on executives of these companies like they're a bunch of fools that don't know anything about what's going on. But the reality is they're spending a lot of time looking at what they do. And they keep trying to improve and optimize what they do. And instead, what they need to be doing is looking at the market. We need to realize that markets shift. And when markets shift, it doesn't matter how good you are at running the business because you can become instantly obsolete.